right? No asset has ever existed like this before. It's a fucking gift. When we needed it the most, we've been given a gift from the gods, much like AI was a gift from the gods. We've been given something that can unfuck your future, which is the whole thesis that I've been talking about. Mm-hmm. So do that.
At the September FOMC meeting, the U.S. Federal Reserve revealed the first rate cut in almost 4 years. Since then, there have been rumors that the 50 basis point rate cut is a sign of panic at the central bank. It has only been in recent years that the Fed has started a run of rate cuts with a 50 basis point cut. This happened in 2001, during the Great Financial Crisis in 2007, and during the COVID-19 pandemic in 2020. Many people think that the Fed's choice to start with such a big cut, even though they said the economy was stable, is a sign of bad things to come for the U.S. economy, since each of these events was followed by major economic downturns. David Sachs, a venture capitalist, and Chamath Palihapitiya, a billionaire investor, both share this fear. They say that the Fed is preparing for big problems in the future. Even though they are trying to look calm to keep the economy from going into a huge mess, they both warn that Jerome Powell and other folk leaders may already be in panic mode. Chath and Sachs think that the Federal Reserve will probably announce more rate cuts before the end of the year. They also think that the Fed may start printing money in large amounts as fear grows the following year. Raoul Pal, CEO of Real Vision, doesn't agree and is sure that people shouldn't worry about a recession because central banks, especially the U.S. Federal Reserve, will not let their economies get too hot because they have the only way to do that: print too much money, which they have been doing since the Great Financial Crisis. In a recent interview on the Julia L. Roche show, a friend talks about his very positive and bullish view of the U.S. economy and the global financial markets. This video has been liked, subscribed to, and post alerts have been turned on for more videos like this one. Here are parts of the interview that we shared. Take a look at the movie and enjoy it.
1970s gold-owning, value-investing inflationists who think this is the case. The US bond market can't completely fall apart. Why? Because you can print money and buy it. So that doesn't happen. The currency could weaken, but the rest of the world is even worse. So I'm not sure where this inflation, this mystical, magical, long-term structural, the 70s are coming back when you've got an aging population, you've got low productivity, and you've got an accelerated technological revolution, including AI, plus high debts. It's almost impossible to generate sustained inflation, which is why China can't generate it, Japan can't generate it, Europe can't generate it, and the US can't generate it either. 2.5%, inflation was at 2.5%. I mean, that's 300 basis points of tight interest rates. That's crazy. Mm-hmm. Look at people's mortgages. Look at car purchases. Nobody could get access to credit. Look at credit card rates. It was too restrictive for the economy. Mm-hmm. And they need to cut it because they also need to roll their interest payments and they need to refi their debts at lower rates. No, I don't think so. I think moving rates as high as they did was necessary to stop that pervasive idea that inflation was going to be sticky, because inflation can be a mindset shift. You know, we saw corporations after corporation just raise prices. And what this did was slow all of that down. So no, I don't think it was a mistake. I don't think a Federal Reserve did a very bad job. Nobody likes going through a rate cycle like that. This is the largest of all of our lifetimes. And so therefore it's pretty ugly. Doesn't feel good. Nobody likes it. Business slows down for everybody, but it worked in terms of getting rid of inflation and any expectations of future inflation. So inflation expectations have collapsed in the US now. Mm-hmm. In fact, where are they today? So 5-year break-evens are at 2% and 1 year are at 90 basis points. So nobody's expecting inflation because the Fed did a good job. Now they need to bring rates lower, and they have to bring it a lot lower. You know, I still think rates come down to 2.5. If you see rates coming down, house prices are going to be rising.
Well, there you go. Yeah.
So what you need to think about is what the Treasury are doing now, which is you buy the house now when house prices are still a bit softer. And you say, look, I understand I'll have a variable rate mortgage. I'm going to pay a little bit more for the first 9 months. And then after that, I should be able to finance it at lower rates. So you should benefit from the lower rates as they come, as opposed to fixing, let's say, 2 years. You just go to variable rates because they're coming down, right? And in which case you'll be able to then at least have a slightly softer housing market. Because if not, if rates are at 2%, where's the housing market? The house you were trying to buy is probably up another 20%. And you're like, Christ, I still can't afford it. Rates have come lower and it's gone up in value.
A friend says that the Federal Reserve will start its processes of quantitative easing and printing money in about 10 weeks. He recently wrote on the social media site X, "I love the smell of more cowbell in the morning. The everything code is in full play. And this is around the third inning. Remember that markets lag up until today. The new China stimulus hadn't even been seen on the chart after 10 weeks. Pal is also sure that AI will totally change the world in the next few years. AI, robotics, and energy storage are two technologies that will make this happen. The CEO of Real Vision says that the rising tide of technology will solve the world's huge debt problem. To my friend, all central banks need to do is keep printing money until robots and AI figure out what's wrong. I think the main reason Pal is so positive about the world markets and coins is because of the problem with output around the world.
Evolution was macro made all of the returns in very short periods of time in catastrophic markets. You know, a market like COVID was great for me because I know that playbook, right? You make a lot of returns very fast, but macro is becoming very difficult. There was a few macro opportunities that came since 2012, but not many. After the European debt crisis, what did we have? We had a collapse in the price of oil in 2016, 15.
Mm-hmm. Which you nailed. You nailed that, yeah.
Yeah, I got that really right.
Really right. Yeah, on CNBC, I remember that.
We had a decent rise in the dollar in the middle, and that was about it. But equities outperformed everything, and all the macro guys missed that trend. And this was my work that I did over COVID when I started to think about debasement of currency, and then started to think about the exponential age of technology and where this is going. And you reach the moment, it's like, oh my God, this is all one thing. You know, we have rising markets that's creating more capital, that's flowing into technology, that's driving technology. We've got the fastest pace of technological change in all human history, and the central bank has taken out the big risks to the downside. So suddenly the data tells you to become an optimist. It tells you that we're in secular trends, particularly in tech and crypto. So even though they're volatile, every low is higher than the last. And when you look back, they've outperformed everything, even though you've had that volatility. And you're like, why was I so stupid? You know, really, I could have just bought NASDAQ when I started my career and I'd have done much better. But the narrative is so alluring around the macro collapse. Mm-hmm. And the fear keeps so many people out of markets. And there's a whole bunch of people on X who've made a whole living out of the fear of collapse. And I know you've been caught up in that in the past. And that fear of collapse stops you investing. It stops you buying a house. And look what happened. Your future self did not thank you. 140% a year returns. And that's including 3 or 4 80% drawdowns, right? No asset has ever existed like this before. It's a fucking gift. When we needed it the most, we've been given a gift from the gods. Much like AI was a gift from the gods. We've been given something that can unfuck your future, which is the whole thesis that I've been talking about. Mm-hmm. So do that. And so it's not about liking, it's not about the culty thing. It's not about any of it. It's like, if I've got 6 years and I want to make as much money as possible, I want to own the best risk-adjusted reward asset I can. And technology is the second one. I just put on X a few days ago the first video of the end game, which was me and Grant talking about debasement of currency and all of that, and where the world was going. There was a lot of the everything code I didn't understand then, but you can see from that video that I kind of had figured a lot of it out and didn't join all of the dots. But I said, listen, there's one asset to own here, and it's Bitcoin. And I can't remember what it's up since then, but it's several 100,000% or 30,000% or something stupid.
I'm looking right now on your tweet is it the one from September 20th? 10 years ago? Okay. Yeah. Since then, Bitcoin up 14,000, I guess, percent. And gold up 107%, debasement up 71%.
Yeah. So, And granted back gold because he's a gold person, and it wasn't a debate. It was just like he was saying, listen, you should use gold. And I said, well, I think Bitcoin's the answer. And look what happened. That was the 10 years. And over the 10 years of Real Vision has been all of the greatest minds grappling with understanding this stuff. All the different component parts. And, importantly, lots of different views. I didn't have these kind of views, but I got them over time from talking to people on Real Vision and starting to understand various parts and thinking it through. And so where is Real Vision in 10 years' time? Well, one thing about, we've morphed over time from just being video to now being a platform. So now it's a big community, a giant community in like 120 countries around the world. And people are now posting their own trade ideas and helping each other in their journey. So it's not just about us now. It's a big network of people, trade idea competitions going on. We've got AI on the platform. We've got education. We've got so much more. But in the future, it's all going to come down to a one-on-one experience. And that one-on-one will be AI. So if we grow up in a world which is, and you particularly, broadcast media, and you're doing it now, still broadcast, because you don't see your audience. You don't have a one-on-one interaction. You can do if you've got a chat going, but that's as close as it gets. Soon it'll be me and your bot, and I'll be able to have hours of conversation with you about anything, which will train your bot and to have more conversations. So it creates this body of knowledge. And then if you think of Real Vision on a platform, first it grows as a platform and then it shrinks into all UX and all UI ends up being AI in the end. In what format, what form factor? We don't know. But, we'll be on that journey for sure. Because there's a lot of work to be done between now and 2030, 2032, 2034, just to help people, as many people. And we've helped so many people. So we want to help as many people as possible transition into this world. And so that's still the mission. But there'll be different tools and different ways of doing it because we can give people superpowers with AI.
Plan B, an independent Bitcoin analyst, recently said on social media that only 27 months in the last 13 years saw all of Bitcoin's value go up. Pal and other well-known cryptocurrency investors and fans had high hopes for Bitcoin and other cryptocurrencies at the start of the year, especially since it was a good year and the U.S. Securities and Exchange Commission had approved a number of spot Bitcoin ETFs. So far, the price action hasn't lived up to their hopes, but they think the time is almost right for crypto asset prices to take off strongly until the inevitable but often short moment starts. Leave your thoughts on Raoul Pal's conversation in the comments section below. Also, don't forget to like this video, subscribe to the channel, and turn on post notifications to get more videos like this one. Thank you for watching.